Good morning, traders. This is Michael coming to you from GammaEdge on Thursday, April 17th with our pre-market morning strategy and briefing session. As always, here at GammaEdge, we start with our three pillars: sentiment, structure, and trend. Currently looking at our market trend model. This market trend model is based on the tick index. You can research that at your favorite investing website. The TLDR for the tick index, it is buyers versus sellers within the overall market. We do look at two exchanges, but with just understanding that this is a time series, so we get to look at the trend of buyers versus sellers within the overall market. Again, we reference the bolded white line here. This is our cumulative tick. This is aggregated, again, buying versus selling. Intraday. This is our key indicator to watch for momentum and trend in the overall market and who is winning the battle of buying versus selling. As you saw yesterday, we saw the downward slope of the CT pick up pretty rapidly in the afternoon, referencing up here our cyan or blue tick indicator here. This is a filtered cumulative tick, plus 1,000, minus 1,000. These are larger block orders or institutional orders, large players in the market. Again, picked up rapidly to the downside, indicating that there are larger block orders and selling occurring than buying. Also, our breadth indicator here, new highs versus new lows. You see, obviously, the new lows, more stocks being sold versus being bought, expanding into the afternoon. So again, sellers maintain control of the overall market. And then we reference our longer term trend indicator, which is our colored ribbon. If the red is below cyan, then that is a longer term bearish state that sellers continue to maintain control in a longer term time frame. So what we'll watch intraday is to see this bolded CT. If we continue to the downside, these shorter term moving averages are just reference for a trend. And if these continue to roll over and then we have a upper left to lower right look, then obviously the sellers continue to maintain control. And then if we do see this bolded CT cross back above these moving averages, then we look for buyers to start taking a short-term control of the overall market within a significant bearish selling trend. So what we've seen historically is we'll get a 2 to 3 day, 1 to 3 day burst to the upside of short-term buying. Again, this could just be a momentum back to the upside of put holders closing positions, and then just a little bit of short-term buying. Obviously, not a significant amount of linear up or impetency of buyers wanting to come in violently to the upside. Then we just see a failure as we go through that 1 to 3 day short-term stretch, and then we look for selling to continue back to the downside. So takeaway is short-term sellers are in control. We'll look to see if this changes any, and then long-term sellers maintain control of the overall market with the reference of those larger plus 1,000, minus 1,000 institutional orders. Heading into the option structure, SPXA, these are larger institutional players. Obviously, our next expiry now is into May after OPEX today. Again, the quick takeaway from this is that we are still put dominated within the overall structure, above and below spot prices. You see the red negative net delta outlined by our red boxes here. So again, put speculators maintain control. Net OI above spot price continues to be dominated by puts. So upward to price appreciation and movement in the overall market will be very difficult. We denote the 5,300 overhead. That's been a key area that we continue to get rejected. And then 5,200 to the downside is an area where we continue to see some short-term support. If we do lose this 5,200, we'd anticipate some more weakness coming into the overall market. So again, takeaway, put dominated, above and below spot price appreciation will be difficult in the short term. Moving on to the SPXP, we like to call this our cigarette boat. This is obviously shorter term expiries denoted by 0 DTE as well as weekly expiries. So these contracts turn over rapidly. Again, put dominated within the overall structure. Above and below spot price, we see a significant amount of red negative net delta, indicating that puts are in control. We reference our transition level, where if we do move into that transition level, we do move to a little bit more less put dominated negative gamma state. Still, again, though, a significant amount of puts overhead, so it would take a large transition. If we do move into the transition area, we anticipate a significant choppiness with price action. Net OI remains put dominated, controlled, even though we do see some some in the money calls above us. But again, the puts maintain the overall control of the overall option structure. So to the downside, again, we referenced that 5,300. Our implied open is here. So staying below 5,300, we would lead to a little bit more weak and bearish state. Again, 5,250 to the downside, and then 5,200 here are important key strikes that we would watch for price action or reaction if we get to those levels. Moving on to the SPX P0 DTE. Obviously, this is expiry for today. Because market is closed tomorrow. DEX transition outlined here with our blue box. It's very wide, noting that our expected move today is back up to 100 points. So again, leading to that overall choppiness and volatility in the market. If we do have thin volume today, we will be at the mercy of the zero DTE traders. So we'll monitor that via our vol-m command, where we're monitoring the speculation via the options volume. Our drunken sailor range outlined by the yellow box here, again, very wide, 5,300 to 5,400, again, leading to a less defined overall trade and choppiness type action within this overall structure. If we do get above 5,300 and stay above that level, then again, extremely put dominated above us. So price appreciation to the upside will be slow and very difficult unless we see a significant overall change in this option structure, as well as the ODT traders coming in with out of the money call speculation to the upside. To the downside, we'd reference really these quarter levels, 52.75, 52.50. We do have some in the money puts below us that could be supported, but again, remember that first order Greeks mechanically opening and closing of those delta contracts of calls and puts can swamp any of this in the money call speculation that we have below us. So again, takeaway, put dominated, price appreciation will most likely be difficult. If we do get above 5,300 or even 5,350, then again, in the money puts above us, 5,400 would most likely be that cap to the upside. But as you've seen, pre-market here, 5,300 continues to kind of be an area that we are traversing to the upside and downside and basically chopping around. Moving on to the delta balance for the SPXP. This is basically just showing us what is happening above spot price and below spot price. We separate these into the left-hand plane and right-hand plane, as well as our delta balance, which is 0, telling us who is in control of the short-dated and on out in time expected expiries of call versus puts. So we've seen a drop in the delta balance here heading into today, as well as a projected delta balance below 0, indicating that puts are maintaining control and the out of the money call speculation is waning and really not existent, as denoted by this green line here. That is the right hand plane, which is above spot price. If it was above 0, that would indicate out of the money call speculators are speculating for price appreciation, which would be a movement to the upside, but that is not occurring at the moment, and delta balance is below 0, indicating puts are in control and that put speculators are anticipating some weakness or at least consolidation and not a significant amount of price appreciation. Moving on to the net stat command, this is basically just indicating the highest sensitivity levels for us today in the left-hand plane, which is below spot price at the open. We've forced this price to 53.04, so if we do open around 5,300, these levels will be the same. And the right-hand plane is above spot price, so indicating a significant amount of in-the-money puts above spot price, as we've been discussing. So price appreciation will most likely be difficult. And to the downside, we see some in the money calls at 5,200. That's why I referenced that level to the downside. If we did see weakness down into that level, that could be an area where we see some stalling or price basically start to rebound off of that level, or at least consolidate. Again, the second and third order Greeks outlined here, again, these are sensitivity levels if we traverse through those levels, but again, understanding that the first order Greeks net delta is the overriding factor within the overall structure. So let's move on to our trading view chart pre-market here. I've outlined some of the levels. 52.80 is a downside. as a transition for the moment. We've discussed that 52.75 and quarter level to the downside for intrans. We'll continue to watch that. And then pre-market low sitting right here around 52.90. 5300 is going to kind of be that key fulcrum level or key level that we continue to watch. If we come up and get rejected again pre-market, that may be an opportunity to short for more weakness down to 52.80 or 52.75. If we do get above 5300, then I'd look for these pre-market rejection levels on the news we got this morning: 5320, 5330, and then ultimately up here around 5340 or 5350. If we scroll back, that was a previous rejection level, and we looked at those higher sensitivity levels with our web app and areas that were going to be difficult to traverse to the upside due to the in-the-money call speculation. I want to show you the SPY chart overlaid with our TradingView scripts. This morning, obviously 530, a very important level. That's a 0 gex level, so it's really kind of a balance and fulcrum level if we stay above 0 gex. And P-trans, obviously we're transitioning into a little bit more call-dominated positive gamma environment up towards the plus gex at 532. So really not a significant amount of upside speculation at the moment. And then to the downside, we see 525 as that intrans negative gex level. If we get below 525, we'd anticipate some more weakness, most likely traversing down towards 520 in pre-market or 520 in previous local lows on a technical analysis level. So today, if you're trading SPY, we really could be stuck between the 525 and 530, 531 level with just extreme amount of choppiness back and forth within this overall structure, and really not a good defined trade. Kind of the same with the SPX that we discussed already. Choppiness could be between 52.80, 52.75, 5300, and 53.20, 30 to the upside. So thin volume maybe heading into the long weekend. Just referencing that again, the market is closed tomorrow, so we'll continue to watch that. Thin volume can lead to price being pushed around those lower exposure areas that we discuss within the drunken sailor range. So it's always good to monitor the web app and as well as the net stat command to give you those highest sensitivity levels heading into the trading day today. So again, takeaway for me is less is more, shorter time frame, still highly volatile, not much of an edge in the overall option structure, which is really broken and still put dominated, so a little more lean towards the bearish side. So let's make it a great day. Everybody have a great long weekend, and we'll see you later. Thanks.